Has the financial industry gone too far? Shortened script. Finance is one of the easiest industries to be inherently distrustful of, and for good reason. It's been behind economic crashes, personal losses, and the conversion of basic needs into assets for speculation. Despite this, it has generated billions in profits with little visible value for society. But finance, at its core, is a tool. A good financial system can allocate resources, facilitate trade, and exchange future value for present needs. It's not limited to capitalism. Finance is vital in any economic system. Like any tool, it can help or harm depending on how it's used. And right now, it's arguably grown beyond its intended purpose. Today, the financial industry is one of the largest, most influential forces in the global economy. Between banks, hedge funds, private equity firms, sovereign wealth funds, and retail investors, we've lost track of what this system was supposed to do. Finance should be simple, but its complexity hides its growing problems. So, what is finance supposed to do? Is it still fulfilling that role? And if not, what are the consequences of a bloated financial industry? The true purpose of finance. At its core, finance connects unused capital with those who need it: entrepreneurs, homeowners, and workers. It takes deposits and channels them into productive uses: building homes, starting businesses, enabling consumer purchases. Take entrepreneurship. Finance is supposed to fund only the most promising ideas. For example, if two people want to cure cancer, one an expert oncologist, the other a dropout, finance should allocate capital to the one with a higher chance of success. That's value creation. This dynamic powered industrial revolutions and innovation. In the 18th century, finance helped fund textile mills and steam engines in Britain. But back then, finance was relatively small. Wealthy individuals funded ventures directly. As time passed, finance grew. In the 20th century, financial institutions began investing not just in production, but consumption. Why produce so much if no one can afford it? Consumer credit emerged for homes, appliances, even cars, and eventually, credit cards redefined how consumers spent money. From 1950 to 2008, U.S. household debt rose from 24% of GDP to 73%. Finance now supports both the supply and demand side of the economy, which sounds great until you see what it has become. Finance's expansion and distortion. As finance grew more complex, its true value became harder to identify. Giant financial institutions now hold power rivaling entire nations. Many generate revenues comparable to countries like New Zealand or Portugal. And here's the issue. Most of this activity doesn't create real-world value. Economist Rana Foroohar describes finance as an hourglass, with savers at the top and borrowers at the bottom. Finance should be the narrow neck connecting them. But only about 15% of financial capital actually goes to productive uses like business loans or mortgages. The rest is trapped in a loop, buying and selling existing assets. This raises housing prices, stock prices, but doesn't create anything new. Speculative short-term trading is a big part of the problem. Traders all over the world buy and sell stocks, currencies, commodities, sometimes within milliseconds. While this adds liquidity, it doesn't help companies or economies grow. It's a zero-sum game. Someone wins, someone loses. Retail traders are especially vulnerable. After the COVID-19 pandemic, millions jumped into markets. But with little training and lots of hype, many lost money. You've seen the disclaimers. 80% of traders lose money. It is the financial version of a "smoking kills" label, ignored in pursuit of quick cash. Warren Buffett once said financial markets became almost totally a casino. Charlie Munger went further. The world would be better without it. A system built on information advantage. Short-term trading isn't the only issue. At the heart of finance lies information asymmetry. one party knows more than the other. A corporate insider might buy stocks before good news hits. That's illegal insider trading. But there are legal forms too, like high-frequency trading algorithms that exploit millisecond advantages. This skims billions from the market each year, without adding any real value. The same applies to insurance, credit products, and loan terms. Financial products are now so complex that the average consumer has no real understanding. This widens the gap between institutions and individuals, allowing the industry to extract more from transactions than it contributes. The human cost of financial growth. It's not just money being redirected, it's talent, too. Finance has become the top career choice for new graduates, while essential fields like healthcare, education, and government decline. This shift pulls smart people away from solving energy crises, conducting medical research, or improving public policy. Instead, many end up building bots that trade stocks for fractional gains. And here's the kicker. Most of these financial gains benefit the already wealthy. In the U.S., the top 10% of people own 85% of the stock market. The bottom 90% still depend on paychecks. Asset price inflation has created $160 trillion in new paper wealth since 2000, mostly for those already rich. Incomes haven't kept up. Stocks, homes, and even rent have outpaced wages. That's why younger generations feel left behind. They are. Finance as a tool, not a goal. Finance is easy to blame for our problems, but it's not inherently evil. It can facilitate investment, manage risk, and improve consumer flexibility, when used properly. But like oil in an engine, too much finance chokes the system. There's no natural limit to its growth, and when finance can't profit from adding value, it profits from extracting it. That's why regulation matters. But before regulation, we need recognition that finance has gone too far. Final thoughts. The financial system was supposed to serve the economy, not dominate it. Today, it risks being a drag on the real world it once helped build. So the question is no longer if finance has gone too far. The real question is, what are we going to do about it?